It's Thursday, October 28th, 2021. All I can say is, wow, things are getting very bad, and things are going to get worse than most people think. Many people still think that this is transitory, that this is temporary, that this collapse that you and I are watching right now is somehow going to just go away. It is not going to go away, ladies and gentlemen. In fact, it is about to get much, much worse. And if you're connecting the dots, if you're paying attention to what's going on, you can see exactly what is happening. Let's first off start today and talk about the jobless claims. Last week, 281,000 Americans filed first-time jobless claims. We got that number today. Economic growth rate slows to just 2%. And they base that on consumer spending slowing down. Spending for goods tumbled 9.2%, spurred by a 26.2% plunge in expenditures on longer lasting goods such as appliances and automobiles. Is anybody that is watching this video tonight shocked at this report? The free money is drying up, ladies and gentlemen. The extended unemployment benefits, the extra $600 benefits and $300 benefits, the stimulus checks, it's all drying up. And as you have said before, and as I've said before, without the stimulus checks, without all this money being injected into people's bank accounts, stimulus checks and $600 benefit checks every week and extended unemployment, this economy shuts down. And we are watching this economy begin to shut down yet again. It is collapsing. And if you haven't been preparing for this, I feel so sorry for you. This thing is going to get much worse than anybody anticipated. And when you look at nearly 300,000 more Americans filing first-time jobless claims, I mean, we're talking about over 1 million people a month. This has been going on for 19 months. You have inflation now in the picture. And any savings that people have is being eaten alive by inflation. No free money coming in. People are sitting ducks. We know that millions of people are in the process of being evicted. We have over 1 million people in mortgage forbearance right now. And inflation is much worse than they're telling you and I. Real inflation, ladies and gentlemen, is anywhere from 13.5% to 15% conservatively, okay? And it's going to rise. Apple sales miss expectations. Tim Cook says supply issues cost company $6 billion out on CNBC today. Yet markets rally. Markets go up. Amazon badly misses on earnings and revenue, gives disappointing fourth quarter guidance. S&P 500 record high today. NASDAQ record high today. And I think the Dow Jones might have hit a record today too. So more bad news, more people losing jobs. Companies missing earnings, fourth quarter guidance, not positive. And this should tell you and I that things are not going to be looking good as we head into November. And as we head closer into the holidays, what is this going to look like? And my real concern is, what does 2022 look like? Please comment down below. Would love to know your thoughts. We all love to read these comments that all of you leave down below. It's a wealth of knowledge. Let us know how things are looking in your part of the country or whatever country you're in. Let us know how it's looking. But 2022, in my opinion, does not look good. Starbucks revenue falls short. China sales hurt. Coffee chain offers mixed fiscal 2022 outlook. China saw store sales shrink 7% in the quarter. U.S. same-store sales increased by 22% in the quarter, rising 11% on a 2-year basis. You know, when you look at Americans, broke, no savings, no retirement, no assets, no net worth, no money put away for a rainy day, huge debt, college tuition debt, credit card debt, people living for today, ladies and gentlemen. The Chinese don't think like that. Maybe that's why they're pulling back, but it's the average American who always writes me and says, JB, I have no money to prepare. I have no money to buy silver. I have no gold. I have no cash. I have no emergency food because I have no money, but somehow I can afford a $9 latte. Figure it out, ladies and gentlemen. Figure that out. The hedge today, retail rents in Manhattan plunge to the most in 5 years. Again, I'm reading this to you so that you look at the bellwethers, you look at the warning signs so that you continue to connect the dots here. This is not evidence of a healthy economy. This is not evidence of a recovering economy. This is telling you and I that this economy is on life support and it is going to flatline here very, very shortly. And if this can happen in New York, it can happen where you live. Herald Square, rents are down 27%. Madison Avenue, rents down 23%. Fifth Avenue, rents are down 11%. Again, ladies and gentlemen, if it can happen in these areas, it can happen where you live. And when we talk about what's happening in the retail sector, oh my goodness, what a disaster. I continue, in my area at least, to see more businesses closing up. I'll see a couple here and there pop up, but I'm seeing more going out of business. I see more vacant real estate, commercial real estate. My goodness, how bad is it going to get? As the Westfield Mall out here is in foreclosure, and people drive by, they have no idea that their mall is in foreclosure. Yet 20-30% of the stores in the mall are gone, and the rest of them more than likely aren't even paying rent. This is the illusion that we are living in. The lights are on, people are walking around in the malls, but the malls are in foreclosure. My mall, the Westfield Mall, in the process of foreclosure. Yet the average zombie is walking around having their $9 latte and believing everything is okay. Here's another article. Wait until all these new home buyers see their property taxes go up next year. Our economy, ladies and gentlemen, is in a Ponzi scheme bubble, and it is bound to burst. Remember, there has never been a bubble in the history of the world that has not burst. This one will just be the biggest one to burst. And people just go, I hope it happens. I want it to happen right now. You've been talking about this for 2 or 3 years. Ladies and gentlemen, you do not want this to burst anytime soon. Look, it's going to happen no matter what. But when it does, your life is going to change. People go, I want my gold to be $5,000 an ounce, $10,000 an ounce, $100,000 an ounce. I want silver $500 an ounce. Think about what you're saying. Think about what this world will look like if that happens. Or shall I say, when it happens. It's going to be a much different world, and you may not feel comfortable leaving your front door open, okay? You may not feel comfortable leaving your house at that point. Yes, your gold may be worth $5,000, $10,000 an ounce, maybe more, but think about the world we will be living in. Careful for what you wish for. Those who went out and overpaid for property, for a house this year, will feel the hangover when they have to pay property taxes. Property taxes rose 5.4% in 2020. They're going to continue to rise in 2021. These reassessed values are going to affect everybody. Just think, if you bought a house for $200,000 a few years ago and now it's $500,000 and your property now gets reassessed for $500,000. Think about property taxes, ladies and gentlemen. The average person now, many can't even pay their state and federal taxes, let alone their property taxes. This is going to be another nightmare. There are so many issues that we're going to have to deal with at some point. Municipalities broke, pensions broke, people and their property taxes not being able to pay, over 1 million people in forbearance, the massive evictions, the massive debt, the massive deficits, Social Security running out of money, and now this taxation that they want to hit everybody with. It's a wealth tax, don't worry about it, but that wealth tax will just be passed on to you and I. So we're living in a very turbulent time, ladies and gentlemen, and I don't have all the answers, but these are things we all need to be thinking about, things that we need to be doing our best to protect ourselves from. This is why I say you need to be holding real assets. This is why I say you need to get the debts paid down. You do not want to be heading any deeper into this collapse with debt. People think like, oh, run up the debt, it'll all be forgiven. Really? Go back to the Great Depression Go back to just 2008 and tell me how debt was forgiven. Yeah, they'll forgive your debt, but they're going to take your house, they're going to take your farm, they're going to take your car, and they're going to take your future. They're going to take anything they can take if you owe them a cent. U.S. pending home sales unexpectedly tumble in September. Think about this. I've said this now for the last month or two. This housing market is beginning to cool down. And, you know, when we look at home sales and auto sales over the past couple of years, people, when they buy these homes, buy these automobiles, buy the boats, whatever, they are looking at the monthly bill. They're looking at the monthly cost of that boat, that car, or that house. They're not looking at the big picture. You know, can I afford a $500,000 house? You probably can't, but can you afford the monthly payment? And most people will go, well, yeah, I can. Hopefully nothing happens, no emergency, your spouse doesn't lose a job, your hours don't get cut, etc. Because one little speed bump and it's over. And a lot of people are going to learn a very, very serious lesson here, that they've bought more than they could afford, that they're going paycheck to paycheck to paycheck, but they can barely squeak by that monthly payment. But now we have a thing called inflation. Now, I just saw super unleaded gas out here for $5.09. And I see a lot of SUVs driving around. Also, rising rates. I think fixed 30-year right now is 3.15% FHA. This is going to have an effect as rates, I believe, are going to continue to climb up. This is going to have another effect on the housing market. So housing sales tumbled 2.3% month over month for September. I was talking to a broker friend of mine at my gym yesterday. And he brought up a good point. And he doesn't sell property in my area, but he sells property about an hour and a half away. And he said what he's seeing things cool down in his area right now. And he said that what he's really noticing is the Airbnb rentals, the weekend rentals, really, really cooling down. And he believes this is going to have a big effect on the real estate market, on inventory, on sales. Because a lot of people bought second, third, fourth homes to use as rental properties, to rent out, use on Airbnb. And we know that a lot less people are traveling now, less people are flying, less people have disposable money to just go blow on a weekend and go rent a house, you know, at the beach or up in the mountains or what have you. And so this is going to have an effect, a negative effect on housing. And so when people can't rent their Airbnb rentals out, and they've got 3 or 4 of these things, how do they pay the mortgage? So keep an eye on that. Because again, people are not going to be blowing money like they once did, especially now that the extended unemployment's over, the benefits, the stimulus checks. And when you look at how many people are losing jobs, how many people are not returning back to work, how many people just aren't getting the hours, aren't getting just the opportunity, and the type of jobs out there, they're just not going to support this real estate market. They're just not. Something, ladies and gentlemen, is going to have to give. The last time spending on cars was this week. Interest rates hit 17%. Third quarter auto spending plunged 2.4%. Second worst print in history, next to second quarter of 1980. And it was in the 80s, early 80s, that we saw interest rates spike to 20%. And people think that interest rates aren't going to go up here in America. Now the Fed's fund rate is 0%, which means this administration better pray for this collapse in spending is all chip shortage and supply shock driven. Because if it's due to demand weakness, with all this quantitative easing already raging in the trillions of dollars in stimmies, and rates unable to go any lower because they're at zero, then the U.S. economy is truly on the verge of a massive collapse. Now, some people will say, well, auto sales are down because people or because the dealerships just don't have the cars available. And look, if you want to get a car, you can still get a car. They're expensive. But I drove by a few lots today and there's cars there. But we all know the reality here is that if people didn't have that extra $600 and $300 a week, if people weren't getting those stimmy checks, that we know that the auto market would have looked a lot different over the past year. And now that that money is drying up, guess what's happening to sales? People are not spending like they once were. And when they do spend, they're getting a lot less for their money. With enhanced unemployment benefits being withdrawn through the quarter, real personal disposable income contracted 5.6% according to this article, annualized, with the savings rate dropping to 8.9% from 10.5%. That means the savings rate has now dropped to its pre-crisis level, leaving a lot less scope for households to boost their spending. So how will people spend? They're going to use credit cards. They're going to get personal loans. They're going to use payday loans, legal loan sharks, in order to pay the essentials, to pay the rent, to pay the grocery bill, to pay the medical insurance, to pay for an emergency, to maybe make the auto payment. And that is going to be a dead-end road for so many people. They are going to get themselves in such a deep hole. This thing, ladies and gentlemen, is running on fumes. The money is running out. So yes, supply chains are broken. And in many cases, it will take years to get fixed. But now we got another problem, and that problem is consumption is falling off a cliff. Think about this. We got inflation, and now we're going to have a consumption problem. No more stimmies, no more savings. That means people don't have money to spend. What happens to the economy as demand from the consumer weakens? And it's going to weaken, ladies and gentlemen, because the consumer is broke. Nobody wanted to tell you that. Nobody wanted to admit that. But, yes, people will go to the credit cards. People will use payday loans. They will borrow from mom and dad. They will do whatever they can to keep the lights on, to keep eating, to keep the car being repossessed by the repo man. But this whole thing, ladies and gentlemen, is on borrowed time. And I leave you with this last article. What will it mean for the global economy when the price of oil soars to $200 a barrel? We're back over $83 a barrel today, I believe. How are people? Look, we're very close to breaking $100 a barrel. I think we could do that by the end of the year. I truly believe by the end of the year, we could easily see $100 a barrel oil. In 2022, it's climbing. As I'm out today, running some errands, I look at these massive SUVs, the massive trucks, the F-350s, the 250s, the dualies, the Escalades, the Suburbans, and it's got to cost $150, $175 to fill some of these vehicles up. And I just saw super unleaded at $5.09 today. How in the world does this keep going? And look, we may have a shortage of automobiles right now, a shortage of SUVs. But at some point, I think we're going to see a flood of these vehicles come back onto the market. It wasn't that long ago, a year and a half ago, 2 years ago, when I shot a video filming the amount of cars at dealerships. And they could not squeeze another car on the lots. And lo and behold, not that far into the future, we come into this crisis, and the government sends checks to everybody, and everybody's making over $1,000 a week, and then nobody had to pay rent. And I mean, wow, the cars disappeared, the SUVs disappeared. And this is the mentality of people that they went out, instead of saving money, many went out and bought these massive SUVs that now cost $150 to $175 to fill up. A lot of money to insure, and many of these people have not returned to work. Many of these people are making less money than they were a year and a half ago. Many of these people now 1, 2, 3 payments behind on these vehicles. Many of these people being evicted. Many of these people are going to have to sleep in these vehicles. But it's all borrowed time, because the vehicles are going to be repossessed. They're going back, and they're going to go back on the market for sale. And what do you think $100,000 truck is going to sell for that's 2 years old, and it's $5, $6, $7 for a gallon of gas or diesel? what do you think they're going to sell for? And who's going to have the money to buy all these vehicles? I don't know. This is how I'm thinking. And remember, I'm just thinking out loud. I'm a guy with a camera and a microphone, and I'm just critically thinking. Love to know your thoughts. What's going to happen to the auto market? What's this look like a year or two from now when people don't have the free money coming in, when people don't have the jobs, when it's $150, $175 to fill up an SUV, insurance costs skyrocketing? What's going to happen? What's going to happen to all these vehicles? And what's going to happen to all these houses when these people can't rent them out for Airbnb weekend rentals and weekly rentals? What's going to happen to all these houses? Again, institutional money has really propped up the housing market, and all this free money that people got and not paying their rent propped up this auto industry too. Everything's a Ponzi scheme, ladies and gentlemen. Be very, very careful who you're listening to, and be very, very cautious right now what you're doing with your money, because 2022 is not far away, and we don't even know how this year is going to end. It's not going to end good, I can tell you that. And 2022, I think, is going to be one very, very scary year, socially, politically, and financially. So get ready, be prepared. God bless you all. Share this video, give it a thumbs up, and I'll talk with all of you very soon.